WATV is very pleased to be joined right now by Chris Sheeren, who is a partner at Huron Capital Partners. Thank you so much for being here.
Thank you.
Tell us about your company and what you do specifically.
So we are a Detroit-based private equity firm. We invest in companies across the U.S. and Canada, companies in the $20 to $200 million revenue range, healthy, profitable companies that just looking for a partner to kind of help them get to the next level, help them bring some strategic guidance and perhaps some executive board level talent to refine the strategy and pursue growth initiatives to really try to grow the earnings of the business. We invest across three categories, which are business services, consumer, and specialty manufacturing.
And what makes your firm stand out, within the industry?
Well, we've been around since 1999, which in the kind of the lower middle market private equity world, right there, shows that we've been doing something right as we've been able to raise capital on multiple occasions. So I think we've done a couple of things pretty well over the years. I think first and foremost, we've surrounded ourselves with really smart people. We have within our four walls a nice diversity of experiences and talent, but beyond that, I think what we've done well is find really strong executives, both at the operating level, CEOs and CFOs, as we try to build these entrepreneurial businesses into something a little bit bigger and better managed, perhaps. And then again, also at the board level, bringing in very experienced industry folks who can make introductions to potential new customers or help solve supply chain issues, help craft strategy, and really just be mentors to the management team, and also river guides to us as we're navigating through our 5-year investment horizon.
Well, here at the M&A Summit, you had a lot of valuable information to share as you took part in a panel called Manufacturing in Motion. Let's talk a little bit about that. Reshoring, for example. What is the trend that you see as far as jobs coming back to the United States?
Yeah, it's interesting. I think it seems to be a little bit mixed. The data and the research that we're seeing is a little bit mixed. Longer term, the U.S. has become a low-cost energy producer. Labor costs over time in China have increased, and so the total landed costs of certain products are becoming more competitive. When you look at kind of a U.S.-made product versus an Asian-made product. On the other hand, we have a shortage of skilled labor in this country. We're based in Detroit, and we see it with some of the automotive suppliers in Detroit. They're sometimes struggling to find qualified skilled labor. So if you're a welder in Michigan, times are pretty good. So longer term, you have some challenges in terms of enough of a skilled labor base to handle an increase in manufacturing jobs. It'll be very interesting to see what sort of tax policy the Trump administration pursues. I personally think a lowering of the corporate tax rate will bring more dollars in tax revenue to the U.S. and also more cash back to the U.S. for U.S.-based businesses to hopefully invest in America and in U.S. U.S. productivity, U.S. manufacturing. So we'll see how that plays out, but I'm optimistic that that may happen.
What sectors in manufacturing do you find more interesting?
We try to focus on sectors that are a little bit less cyclical. Within the manufacturing world, you can't totally get away from the broader economic cycles, but there's some sectors that are hit harder than others, and so we try to avoid the ones that are a little bit more boom and bust, and ones that are in favor of ones that are a little bit steadier and a little bit more stable. So we really like food and beverage. Those long-term consumer demands tend to not change that quickly, and so it's a much more stable end user demand there. The automotive aftermarket we like, kind of similar sort of, unless you're getting into really big ticket items, a lot of these folks are enthusiasts and kind of in good times and bad are going to, this is their hobby, and so if they're tinkering with their car, they might spend a little bit, whatever extra cash they have on, on some, a new hood ornament for their 1966 Shelby, Yeah. Other than that, specialty chemicals, which would include coatings and adhesives, we're very bullish on that sector as well. Specialty films, plastics. These are areas that again we think are not quite as impacted by economic cycles, and so these are where we like to focus our time.
But moving forward, if we look toward 2017, are you optimistic about the future of M&A transactions going into 2017?
You know, I don't know if we see a robust change. We're a good 2 years into a pretty strong seller's market. And that's been fed by a lot of cash, both in the hands of private equity and corporate buyers, historically low interest rates, and a finite number of decent companies for sale. I don't see that changing radically in the near term. So absent a broader economic downturn or some other shock to the system, I think we see kind of more of the same for 2017. Again, a finite number of good companies out there in the market, and still a decent amount of cash chasing those.
Great. Great insight, Chris. Thank you so much for being with
Thank
us
you.
today. We
My
appreciate
pleasure.
it.